So we're going to cover off a few topics today. I'll go ahead and share my screen. So bear with me while I load this up. I hope everyone can see that clearly. Nice picture of the Eiffel Tower there. There you go. Lovely start. Our junior advisors and power planners have put this together. So certainly not marketing experts, but something to run through today. We're joined by the lovely ladies at Lexity. Here we go, some pictures for us. I'll give you a quick introduction to myself. I'm a senior wealth manager at Holborn Assets. I think it says the word senior on Jacob's profile too. Look at our pictures. We're hardly senior looking people, but we've been in the industry a while. I'm a qualified financial advisor specializing in expatriate advice, predominantly in France and Spain. I'm based out of the Spanish office myself. I've been in Spain as an expat myself 7 years, and predominantly focus on savings, investments, pensions, and retirement and tax planning. So, Jacob, I'll pass it over to you for a quick introduction to yourself. Go ahead.
Yeah, I'm Remy's counterpart. Been in the industry for a little over a decade now. So I think, Remy, I've earned that senior wealth manager title. But been with Holborn here for a couple of years. I am the U.S. expat investment specialist. So I help with any type of retirement plans as U.S. expats move to the EU, but also anywhere else in the world. And even if they decide to move back home, I'm able to help out in a continuous manner. But looking forward to sharing some good information today, and I will pass it on back.
Well, Jacob, thank you. The reason for bringing Jacob on the call, we had a large influx of inquiries and demand to move to France, I guess, with most of Europe from the US, and we're seeing a lot of people make that transition since November, actually, strangely enough. But predominantly, as you can probably tell from my accent, I'm born in Cambridge, England, and have a good understanding of the cross-border, financial issues around the UK to France, and similarly, Jacob specializes in our US connected clients within Europe. Sandra, do you want to lead us off with a bit of an introduction to yourselves and the company?
Sure. So I'm Eleonore, so I'm an immigration attorney. I'm a French registered attorney. I'm specialized in immigration and relocation to France. And both Sandra and myself are working in a legal tech law firm that is called Lexity. And we are specialized mainly in immigration and relocation services. So we have offices based in several European countries, and we try to provide a one-stop shop for all of your relocation questions. And that's why while we provide immigration advices, Sandra provides tax advice.
Perfect. Sandra, a quick hello from yourself.
Yes, hello, I'm Sandra. I've been a tax lawyer for 10 years, French tax lawyer. I help clients, individuals and companies understand the tax implication of moving to France. So tax residency, where will their income be taxed? Do they benefit from tax credit to avoid double taxation? How do they declare their income in France? Individual tax return, business tax return. So I'm here to help you.
Perfect. Guys, the partnership is slowly taking shape with Lexity and Holborn Assets. It's a big partnership, one we're proud of. It's two big organizations working together. There's obviously lots of areas that we don't specialize in that Eleanor and Sandra, for example, can assist our clients with, and similarly on the other hand. So, guys, very important part of the webinar. We'll end with a question and answer section. You'll see whether it's on the bottom or the right hand side, a question and answers tab. Feel free to jump in with any questions throughout. I'm sure it will trigger some questions as we go through, and we'll try to get as many covered off as we can. Quick introduction to Holborn Assets. I'm going to talk like it's the best company in the world, but there's a lot of reasons myself and Jacob work for Holborn Assets. We're one of the largest wealth management companies globally. We have 18 international offices. It's around 500 employees worldwide now. We operate in around 150 countries. As we mentioned, we're based in Europe. We head up the European arm to the business. There's offices in Spain, Portugal, Cyprus. We don't have a physical office in France. Maybe that's something I might head up at one point in my life, but given all the research and conversations I have around moving to France, it spikes an interest for myself. But we specialize in expats in France and Spain, Portugal. They're our essentially core markets. And look, the scope of advice we can give is quite vast, ranging from savings, investments, alternative investments, property investments, pension, retirement planning, as well as citizenship and visas in certain jurisdictions. We'll skip briefly over why I choose France. I think there's probably quite a few reasons you're all joining this webinar, and I'm not going to tell you whether Paris or Toulouse is a better place to live. We don't work for the French Tourism Board, and look, we don't have any sort of official real estate ties. Certainly, we have contacts in that space, and if you're looking in the area, myself and Jacob have just done an event with Your Overseas Home in the UK. And look, if you need help or assistance in that, I'm sure the lovely ladies will help you, certainly in Paris. But many benefits of France, and there's a reason it was the most visited country globally last year. I think it was 100 million people stepped foot in France as tourists or expats. We'll start with I guess the starting point in the transition to France, whether you're coming from the UK, the US. Just to touch on the UK and US, there's going to be quite a bit of different advice on both of those sections, especially for myself and Jacob. The structuring of finance is quite different, but from a visa point of view and immigration, reasonably similar. Oliver, do you want to sort of take over this slide and touch on more the perhaps working visas and visitor visas initially?
Yeah, sure. Thank you, Remy. And I love the picture with the baguette. So yeah, here you have an overview of the main categories, main big families of visas. But the one I would like to mention, the first one would be the visitor visa, because it's the most popular and most common type of visa that people usually apply for. Why? Because it's quite easy to meet the conditions. So basically, the conditions are to have enough savings or income to support yourself in France, a medical coverage valid for France, and not be working in the country. Along with the visitor visa, you have other different type of visa. I'm sorry, but
there's a volume outside. Apologies.
That's okay. Yeah. So along with the visitor, you have different visa options, and I can break them down mainly to working visa and family visa. The family visa are for very special categories. So either you are married with a French person or someone that is from the EU, and this facilitates the obtention of a residency permit as family members in France. But otherwise, you have the working visa. And within these categories, well, it really depends whether you're a freelancer or a company owner or working by yourself. And in this case, you should apply for the entrepreneur visa. Well, we have two main entrepreneur residency permits. Either you are a freelancer and you want just to be able to work under your name, and you can apply for the Profession Libérale residency permit, where you have to explain a little bit what is your project in France, draft a business plan, get an opinion on your project, and things like that. Or you have the talent visa for company owners. And the main difference between those two is that for the talent one, you need to invest at least 30K in your business in France. So this is for all the freelance company owner option. But if you're working as an employee, there are other visa categories. And depending on your salary, on your contract type, you can apply for one or another visa. We have the regular employee visa. If you work for a group of companies, we have the intra-company transfer visa. All of these visa or employee visas type have their own conditions. I'm not going to give you a very boring legal lecture about that. But of course, if you have any questions, feel free to put them on the chat. I'll be happy to answer them.
So, Eleanor, what's the starting process then? Case study me. I am keen to move to France. We have an initial consultation.
Yes, well, before our consultation, I'll ask you a few questions in order to know what is your contract type, who you are working for, if you're working by yourself, if you're working for a company, if your company has branches in other EU countries and in France. And depending on your answers, well, as well, of course, if you're willing to bring some family members with you, we can redirect you through one or another visa type. There are many different visa categories in France. Here we are really trying to break them down to the most common ones. But of course, every situation is particular. And yeah, I didn't mention that we do not have yet in France a digital nomad visa, but the visitor visa or the entrepreneur, depending on your specific situation, can be very good options for people that intend to be working remotely from France.
Oh, perfect. Okay, and you're not going to charge me, I know we're friends, but for an initial consultation?
No, we offer a first free of charge consultation, after which you have a very detailed email with the options that are suitable to your situations. And regarding our fees, we are always very transparent. It's a fixed cost. You know where you're going from the beginning. This is very important for us.
Good to hear. Thank you. And then just to touch on the tax, I guess, residency status and what sort of rules apply. Sandra, do you want to fly us through this slide for us?
Yes. Yes, it's very important to determine your tax residency, because on the first step in taxes, it's to know if you're French or not, a French tax resident or not. If you're a French tax resident, you have to declare all your worldwide income. And if you are not French tax resident, you have only to declare your French revenue. So, for example, if you have rental income in France. So in France, the French tax code provides 3 alternative criteria to qualify as a French tax resident. If you checked one of these criteria, you will be considered as French tax resident under French internal law. The first is an economic criteria. So that means the center of your economic interest, your business, employment, investment, real estate are in France. The second is a professional criteria. That means you exercise your main professional activity, salaried or freelancer, in France. And we have a third criteria divided in 2 criteria. It's called a personal criteria. So that means you have your household in France, where your spouse and dependent children live. And if it's complicated to determine a household in France because you are single and you are tied in France and in UK and US, the French tax code said if France is your mainstay, you are considered as French tax resident. A lot of people think that if you stay more than 183 days, but for example, if you stay 5 months in France, but 3 months in Spain, 3 months in UK and 1 month in US, you will be considered as French tax resident because it's France will be your mainstay. So very important. Also very important, you can be tax resident of both countries because internal laws. So for example, we know that US citizens are US tax residents, but you can also be considered as a French tax resident because you stay, let's say, more than 6 months in France. In this case, we have to see the tax treaty between France and US or France and UK, depends where is your other country. And normally all the tax treaties are similar. And in this case, in US and UK, they are similar. And they said the first criteria is the state in which you have a permanent home available for you. Very important. That means a home always available for you, not rented to a third party when you are not here. So that means if you have a home in US available all the year for you and a home in France available all for the year for you, you have to say the second criteria for the tax residency. The second state is it is the state which your personal and economic relations are close. It's called the center of your vital interest. So it's a little bit complicated because we have a lot of people that have like some relations in France and some economic interest in US, in UK. So we have to study together to be sure where is your tax residency country. And if you have two centers of vital interest, but it's very rare, it's the state which you have an habitual abode. So that means the state which you stay the longest. And if you have two habitual abodes, it's the state which you have the nationality. But to be completely honest, normally we stop in the states which you have your personal and economic relation, because we can know where is the state where you have your personal and economic interest. So the tax consequences if you are a French tax resident. So like I said before, if you are a French tax resident, you have to declare your worldwide income in France. Why? Because that doesn't mean all your income were subject to income tax in France. Maybe some income can benefit of a credit tax, like, for example, US retirement pensions, or all the rental income are only taxable in the place where the real estate are. But this amount will be take account in France to calculate the effective rate. So the effective rate, that means, in fact, the French tax administration will calculate all your will make all the income and will calculate the tax rate if the income are taxable in France and all the income are taxable in France. And for example, the effective rate can be, I don't know, 22%, but this effective tax rate will be only applicable in your French revenues. So it's very important to declare all your worldwide income, and also in the right box, in the correct box, to benefit from credit tax, because we have a lot of problems. Some people make the correct box for the first step, but they don't indicate for the credit tax that they have to pay in France. In France, we have also the French wealth tax. So that means normally if your assets, so your real assets, estate assets, the net value of real estate is over 1.3 million. Normally, when you are French tax new resident, so that means you are not in France in the 5 past year, you can benefit from an exemption. So that means in this case, you are only taxable if you are real estate in France, like a non-French tax resident. You have the same rule, and this rule lasts for 5 years. So very important. In fact, in the first 5 years, when you come to France and you are not a French tax resident, you have only to declare if you have real estate in France over 1.3 million. And after 5 years, we have to make some calculation. We have also inheritance and gift. So in this fact, if you are a French tax resident and you received gift or inheritance from US and UK people, it's not taxable in France. But if you give something to a US or UK people, it will be taxable because you have a dollar. So very important. It's the same we have to see, because all situation is unique. And sometimes with the specificities of the tax treaty, we can avoid to pay taxes in France. Also in France, very important, we have with the capital gains on global investment and property. Normally, when you are a French tax resident, dividends, capital gains, and interest are taxable in the place where you live. So that means normally you have to declare them in France, and it will be taxable in a flat tax. It's 30%, 12.8% for income tax, and 17.2% for social security contributions. We can have some exception from US people, for example, if they are US citizens and receive US dividends or US capital gains or US interest, they can be exempt to pay income tax and social security contributions in France, but we have to make sure that it's really US dividend, US interest, so received by US company or US interest from US debtors. For real estate, normally the tax treaty say that the capital gains on real estate are taxable in the place where the real estate is located, but France has the right to also tax on capital gains on real estate. So very important, for example, if you plan to move to France, be sure if you have a primary residency in UK and US to put on sale your primary residency before you move to France to avoid to pay any capital gains on this primary residency in UK and US. We have all, because in France, if it's your primary residency, we don't pay any capital gains, any tax, any income tax and social security contributions on capital gains on real estate. So that's why it's very important to sell if it's possible, or at least to put on sale before you move. And also we have another rule: if you own your property more than 30 years, you don't pay any taxation in France. So for example, if you own your property more like 30 years, if you don't put on sale or you don't sell before you move to France, no problem, because even if you sell it when you are in France and you become French tax resident, you don't have any taxation.
Well, I learn something new every day. So I'm based in the UK, had my house 30 years, or Jacob's in the US 35 years. The property is exempt from tax in France.
Exactly.
It's a big conversation we have around the ifs and buts or maybes around selling the properties prior to the move, and people are always wondering whether they should do it. Again, a lot of it comes down to preference. If they want a base in their country of origin, you know, I guess you have to weigh up how much time you're going to spend there. But from a tax perspective, you know, albeit it may be tax exempt in the US or the UK, for example, in France they're going to catch you for a bit of capital gains as and when you sell that. So timing is important, right? If we go back to the 183 days in France, it's a calendar year, so January to December is the tax year in France. For example, someone moving from the UK, had someone moving in June, selling their house. We said, why don't you slightly delay that till July, become a tax resident next year, tax exempt on the gain of their property sale. We're talking thousands here, and the planning aspect is important, right? Sandra, I understand you do specialize a lot in the tax reporting, the ongoing reporting for people's accounts and businesses.
Yes, not for businesses, because for businesses we need a chartered accountant, but we have a partner.
Okay.
But yes, for personal income tax, normally the tax campaign begin in beginning of April, and until end of May, beginning of June. And I can assist all the client to make the French tax return, because, for example, for the French tax return, it's a little bit complicated. You have to do that on paper because you don't have your tax number. And it's complicated because online you can check some box and they will indicate you where you have to fill in, but on paper you can't. So for the first, it can be a little bit complicated. So I'm here to help everyone, and the campaign begins in 3 weeks. So
Okay. Well, I think a lot of the move can be complicated, and hence why it's good to speak to experts, professionals like ourselves. Initially, Eleanor with the visa, the immigration status, any tax sort of queries in the interim. Certainly, Sandra can help. But myself and Jacob, we're not qualified tax advisors, and we do get a lot of tax questions, but it's more around the sort of tax efficiency of an investment, savings, pension, retirement plan. As far as US tax reporting, I know we've got a lot of US clients registered and joining these webinars. We both work with a similar company, Greenback Tax Services, who specialize in US tax reporting for European-based clients. So look, between us, there's plenty of sort of contacts and professional network to assist with. We'll touch on UK and British expats in France. Now, again, just to reiterate, we're dividing that advice because it's somewhat different when it comes to UK expats and US expats, and Jacob will touch on that shortly. So please be patient, bear with us. Just to give you a brief overview of what some steps might be to restructure your assets in France, whereas the US, a lot of the advice is to keep the structures as they are. In the UK, most people would have assets set up in ISAs or premium bonds or general savings accounts. I'll touch on pensions as well, but Similarly, there's tax efficient vehicles in France. An ISA or a premium bond will hold no value once you move over to France. It says they're fully taxable in France. Premium bonds winnings are subject to French tax if you do win at all. And a big vehicle for British expats or anyone in France in general, I think the percentage is around 70% of the adult population has an assurance V type structure in place. And it's just similar to an ISA. It's a tax efficient wrapper to hold your investments in or savings. And look, I can't go into product specific details. I have a webinar in a few weeks with one of our partners on potential options in that space, but it's worth having a conversation to look at how you can restructure your assets in line with the tax authorities, but in a tax efficient manner, not only for drawing an income, but for succession planning as well. Here's a few brief overviews of what the benefits of an assurance V are. Essentially, like an ISA, there's no tax annual until you take a withdrawal, so it's a gross free roll up. The benefits come significantly after an 8-year period. Essentially, you want to get the clock running. So even if you start your assurance fee at a small amount, knowing that monies are going to come later from inheritance or a property sale, the clock's ticking. After 8 years, it's 4,600 for a tax-free allowance. On a single sole policy holder, a joint policy can have 9,200. Generally, we'd set policies up as a married couple in a joint life last death basis, meaning monies are passed on to the last surviving spouse. You can name any number of beneficiaries on these. They sit outside of your estate in France. And one of the main benefits is that succession planning aspect of it. For British expats, just as a reminder, each beneficiary for any assurance fee set up before the age of 70 has 152,500 tax-free allowance. Beneficial if you've got 4 or 5 children or more, but essentially the reduction on tax paid to your children or loved ones is quite significant, and it's quite an easy tax efficient way to pass on money. We're not going for a long drawn out probate. A big part of it is obviously income generating vehicles and income requirements. A lot of people retire to France. How do they take money outside of the pensions? An assurance fee ticks all the boxes from a tax efficient income generating source. And as I said, there's plenty of different options in this space. We'd always recommend having a chat to work out your objectives, your income requirements, your risk tolerance, and we'll sort of match you up with the best available vehicle. Another point on Holborn Assets, we're a completely independent company, so we're not tied by any bank or institutions. We have what's called freedom of market. We can deal with pretty much anyone and everyone, but it'll always be putting the client's interest at heart of our advice to make sure we're set up in the best way possible. It touches on withdrawals and sort of regular payments. Again, this is all specific to clients' needs and objectives. And then currency, I arguably don't want to go into currency too much. Jacob, you may touch on this more regarding the volatility we've seen across the US and US dollar euro sort of transition recently. But generally, our advice for British expats looking at assurance fees, firstly, they're internationally portable vehicles. We know as expats, we like to travel around a lot. If you decided to move back to the UK, that vehicle would be tax neutral back in the UK. There's actually some benefits from time apportionment relief and moving assurance fees back. If you decided to move to Spain or Thailand or wherever, that essentially vehicle would become tax neutral. And you have a lot of currency flexibility around it. So there's certain options. Your money may now be in sterling and you want to spend and live in euros. There's ways to draw from the assurance fees in euros. But I'm not going to predict what the currency may look like in the next 12 months or so. Just to touch on pensions, as far as where we specialize and what we can help with, we have a pension specialist team who look at and compare existing UK pensions. And predominantly that's workplace pensions and private pensions. So that's your DC, DB schemes, private invested pensions, self-invested private pensions as well. And we're looking at alternatives. Essentially, our pensions team will look into the benefits of your current schemes, whether that's one scheme or 5. And the idea would be to amalgamate them into one easily manageable entity and look at options on transferring those. Now, 6 months ago, 9 months ago, we may have been looking at alternatives around overseas pensions for British expats. Again, touching on British expats, where the QROPS was quite an attractive offering. Now, the recent changes in government, there's a 25% overseas tax charge. It's not advisable. We tend to favour the international SIPP, where essentially we're keeping the pension onshore in the UK, just having a lot more control and flexibility from a European point of view. The ongoing servicing and advice from an expatriate advisory company like Holborn Assets. But we certainly recommend exploring your options. There's not too much we can do until essentially you have that date set in mind. It will come in the way of formal advice as far as a suitability report and detail the ins and outs of the pension transfer, as well as any charges involved. But it's certainly worth the conversation. Those are the benefits at the bottom: tax efficient structuring, investment choice, currency flexibility, obviously taking income, for example, from a pension in euros, sometimes more favorable than sterling. I guess moves us nicely on to the US. Jacob, your knowledge is certainly much more clearer than mine on the US retirement accounts and investments, so I'll perhaps leave this over to you.
Yeah, definitely. And I want to let everyone know, right there, I give a whole webinar just on the US on a monthly basis. There is a ton to go into. And so today I'm going to use kind of the short time I have to hit some of the big pitfalls that I see. So like I said, I'm the US expat investment specialist. I see US expats not plan ahead for these types of move all the time. So one that I didn't even have on my list here, but it could potentially be the biggest one that I see, is one that Sandra already mentioned, of selling the house, primary residence, in the same year that you actually become that French tax resident, and doing it just a little bit too late. And that can just create some huge capital gains, particularly when we have up to a 500,000 capital gains exclusion for our primary residence in the US. We want to just make sure to use that. Another thing that can be quite similar, in fact, it is Roth IRAs. Roth IRAs can be taxable in France where we don't necessarily have that same taxability in the United States when we take distributions. And so that particularly, depending on your age, it might make the most sense to actually take that Roth, if you're planning on spending the rest of your days in France, and taking it before you become a French tax resident. Now, if you are planning someday moving back to the States, you can always hold on to it, let those gains grow without any type of taxation in the meantime, and be able to take that tax-free windfall at some point down the road when you're no longer a French tax resident, really along the same lines as selling a house there. So, you know, that's particularly can be some big ones, particularly when backdoor Roths have been such a big topic of conversation over the last 10, 15 years in the States, where you might want to think twice about necessarily doing that. As far as another huge potential pitfall that I see US expats making all the time, it's important that you keep your retirement accounts custodied within the United States. No other country has the ability to receive 401k, IRA, or other types of US-based retirement accounts and maintain their tax structure. Moving these accounts to another institution that claims to be able to hold them offshore can lead to dire tax consequences that can significantly impact your financial future. Complexities of some of those international tax laws means what might seem like a convenient solution can actually result in some unexpected huge liabilities, which can kind of brings us to another big bit that I see often for pitfalls for US expats is it can be tempting at times to use a US address to maintain relationships with US financial institutions. However, this approach carries some significant risks. Discovered, it could be seen as fraud, potentially resulting in the forced liquidation of your assets, which can be a devastating outcome tax-wise for retirement accounts, for brokerage accounts. So you always want to be transparent about your residency status with your financial institutions to avoid any complications that can potentially arise from this misrepresentation. So along the same lines, right, I have a pair of clients that I'm onboarding right now that were actually at one of my previous institutions, Morgan Stanley. They have moved to Spain, but France is the same scenario. and had been using an old friend's address in back in the States to do all of their banking investments. And once Morgan Stanley actually figured out that they had moved abroad, they froze all of the accounts and gave a 60-day liquidation notice. So we're opening up accounts to have a home for all of those assets so that they don't have any type of liquidation that actually takes place, in which case all of their unrealized capital gains would have been taxed, their retirement accounts would have been fully taxed as income. And so that just, it would have devastating consequences at some of those top rates of income to have all of that be taken in a single year. One thing that Remy mentioned I was going to talk about right now, which can be pretty volatile in an area that hasn't necessarily been quite as volatile in the past, is currency fluctuations. I mean, we are seeing that the US dollar, with any type of news out of the White House, have some sort of reaction. And so we partner with a few different currency advisors who that's what they specialize in. They, particularly when you're looking at buying a property abroad, to lock that rate in for the future. And so that if we do see any type of devaluation of the US dollar that we've seen over the last month, we can actually lock that rate in advance. And so when you purchase that property, you know exactly how much it's going to cost. The Canadian dollars is something, right, that should be a big warning to people. If you had a contract 6 months ago for a property you're going to close on today in France, and you were expecting to spend a certain amount of Canadian dollars, that held Canadian dollars, your budget just increased on a pretty incredible level, just because of some of these fluctuations that we're really seeing. One thing that can be super helpful, I've talked about a lot of problems, don't want to be super negative here, but one thing that can be super helpful before the move is potentially setting up a reliable income stream. And when I say that, right, the markets have been volatile, right? We've seen the S&P 500 go down almost 7.5% over the last month, a little bump today, which never hurts, but we want to make sure that that income stream that you're relying on for your day-to-day expenses is reliable and potentially even guaranteed. And so annuities have really been back in vogue, with higher interest rates to be able to generate this income off of, as well as some restructuring of the products and with lessening of costs, heightening of benefits. Over the last 3 years, they've become much more popular, much more useful. And one thing that I've really seen in France in particular is being able to talk to landlords about another guaranteed income source that you have, that we can always write a letter around and really explain that if they're not familiar with any type of annuity. Another big question that I'm getting from my US expat clients right now is we're having some fears about the United States and are having too much money there. Can I move my assets abroad? The answer to that is yes, but we have to be extremely careful to avoid PFICs or passive foreign investment companies. Think of it like a foreign mutual fund or ETF. Even that assurance V that Remy was just talking about earlier can be seen as a PFIC. So fortunately, we do have some options around that can definitely be compliant. Held in different jurisdictions, like Jersey is a good example of being able to hold different assets. Again, not retirement account assets. Think of it as your non-qualified funds being able to be held in different jurisdictions. Of course, we need to be particularly specific and picky about what we're actually investing within those accounts to not hit some of those same type of PFIC requirements. But another option that I'm seeing a lot of Americans using right now is actually private lending to large corporations abroad, which can yield up to 12% annually. But let me know if you have questions on some different products like this, because moving money offshore isn't necessarily right for everyone. So want to make sure that we're giving specific recommendations depending on your scenario. Our minimums for US citizens start at 100,000 for a tailored portfolio that's going to be unique to your scenario. But really our goal is to provide you with some of the financial tools and resources necessary to navigate some of these complexities of investing while living outside of the States.
Couple of very good points you made, and something we've spoke about personally. Again, we have to differentiate from UK advice to US advice, because the word annuity pops up all the time, and people in the UK say this pension retirement accounts offer me an annuity. Generally, 90% of the time or more, it's not a favourable outcome. The annuity in the UK will simply die with you. There's no legacy, there's no death benefits, and I've seen some quotes, Jacob. Obviously, we work together, and some family friends from the US have been in contact with you, and having the ability. Again, I don't want to talk about US products at all, but having a zero downside risk with a fixed payment for life that you can still pass on monies, given the volatility we've seen in markets. We're never here to talk up markets or sell markets. It's not what we do. We're here to structure your assets in the best way possible. Arguably nowadays, if we can de-risk portfolios, with a fixed type element. You also touched on, well, again, which is very interesting, the rates available in sort of corporate type bonds, especially in the UK. It's something very important or very appealing for UK clients as well as US clients. It's somewhere you can have a bit of currency flexibility, euros available, dollars available, sterling available, I believe. And short-term bonds are a great way to generate not only a good rate of return, but a good potential income as well. So, myself and Jacob work in the initial consultation way of having that conversation. There's certainly no cost, there's certainly no obligation, certainly no commitment, certainly no pressure. We're here to see if we can help, and we'll create you a financial plan and provide a recommendation based on your circumstances, based on your objectives, based on your risk tolerance. I guess that's what I've just said. What should I do? Look, guys, we're here to help, and between us all joining on the call today, and we're happy to have those initial conversations. It's like when you travel to France for a scouting mission, speak to us around the financial, tax, immigration planning part of it. It's important to take every step, and there's no cost in these consultations, right? We're here to provide options to see if and where we can help. Look, there's some pretty QR codes. Welcome to 2025. My diary on the left-hand side, or arguably this might be mirrored on the other side. If you want an initial conversation, let's set up a call. Take your phone out, scan those QR codes. You'll get taken directly to our booking pages. Select a convenient day and time. You'll automatically be sent a Zoom invite, and we'll get a chance to run through on a one-on-one basis. Eleanor and Sandra's email addresses are there. Now, everyone who's registered or attended this webinar will get a copy of the recording along with all of our contact information. I'm just going to stop sharing my screen. I hope people have had a chance. Oh, no, I don't have to stop. There we go. So we've got a few questions coming in, and one I just wanted to touch on pre-webinar. Thank you for all your questions. We really appreciate that. Those coming in, quite a few coming beforehand. One around US trust in France. I think, Jacob, you're getting quite a few questions around that. Sandra, it's more around the sort of tax reporting obligations and what sort of benefits do they hold, if any. Either of you jump in on that to give us an understanding of US tax and US trust and how they're viewed in France. Sandra?
Yes, yes. So US trust or UK trust, it's in France. It's complicated because we don't recognize the trust. We don't have something similar, so the taxation can be very high. So that means, for example, it will depend if you are the settlers, the beneficiaries, if you receive distributions, if you receive dividends, interest. So it's very important to be aware that where you come to France, you can be taxed on the trust or the capital distribution you have. For example, for the beneficiary, if they received some capital distribution, it will be considered as a gift or donation. And in France, the rates are very high for a gift and donation. So we will to avoid that. Also, it's very important to know that in France, we have the obligation every year to declare the trust in the special form. So it's a little bit complicated. You have to list all the assets you have to the French tax administration with an estimation of the amount of these assets. And also like report all like the beneficiaries, the settler, the trustee. So from me, you really have to think about the trust before you move to France. Maybe you can have some other option if it's possible. But like I said, if you have a trust, maybe to have a consultation with an expert, a tax consultation, to know to know the taxation of the trust if you want to keep this trust, to know the taxation if you're the beneficiary when the settler will die, or to know the taxation if you receive dividends or interest as a beneficiary or as settlers.
Okay, perfect. So as far as sorry, I think Jacob just answered that one. We've got Paul here. I already own a house in France. Recently bought a shop which turned into a cafe. Which visa should I apply from? And how long does it take? And what documents do I need? There you go. There's a few questions for you, Eleanor. I'm assuming Paul may be UK based. Planning on a visitor visa, I would imagine.
Yes. So can you tell me the name of the person that posted the question? Because there were many questions in one.
Paul Gleghorn.
Okay, I see it. Okay, if the person do not wish to be working in France, in this case, yes, the visitor visa is an option. But I understand that Paul wants to turn this shop into a cafe. So in this case, he will have to apply for a working visa. Okay. He cannot be an employee because Paul will own his cafe. So I would consider one of the entrepreneur visa. Given that probably you bought real estate for your shop, the 30K investment has already been done. So it would be very interesting to think about the talent visa for entrepreneur.
Okay, perfect. I think it leads nicely on to Catherine's question for entrepreneur visa. How do you show you will invest 30,000 into business?
It can depend on what type of investment you're planning to do, but it can be in a banking account, it can be in assets. I also had recently someone that's a little bit like Paul, didn't want to open a cafe, but wanted to run a gîte or a Airbnb. This is something that we see a lot. We have a lot of requests for this kind of activity. And in this case, the investment has usually already been done by buying a house or investing in real estate. So it can take different forms. But that's why it's important to be accompanied and to check with a professional if your investment is shown in a proper way for the French administration.
Okay, so obviously having those initial conversations with someone like yourself is good, right? We always have quite a lot of personal questions, and we love every question. But look at the details on the screen. I hope that they're still there for the initial consultation, because everyone's circumstances are different, everyone's objectives are different, everyone's requirements are generally different. Sylvia said we live in Spain and want to move to France. That's sad.
Yes.
Well, we're in our 60s. What is the best visa? Retire.
Well, if you do not want to work and you want to retire here, I would definitely consider the visitor visa, because it's meant for people that are not working in the country. It's quite easy to obtain it. And I have had many, at least 2 or 3 maybe customers this year, only in 2025, that were moving from Spain to France under the visitor visa.
Okay. Perfect. So these are probably quite similar. Tax purposes, do I need to make a new will in France? If so happens when I die, regarding my US assets with this new will? Someone said about estate planning. Do you recommend anybody who can assist? As far as will writing, I know you guys work closely with some notaries in France and can point people in the right direction, right?
Yes, exactly. We work with notaries in France. But just to be clear, for tax purpose, it doesn't change anything if you have a will, because normally a will, it's possible to govern the rules applicable for the division of your assets. For example, you give such property to such person, but the applicable tax rules remain those of international tax treaty and domestic laws. So, for example, even if you said in your will, but the notary will say no. But even if you say French tax law will be applicable for my UK or US tax law will be applicable for my inheritance, it will be not possible, because if you're a French tax resident at the time of your death, the applicable inheritance tax rules will be those of France. So you don't have any choice for that. But yes, we work with notary if you want to make a will or something else, or for real estate also.
Perfect. Jackie said, after applying for a visa and it's approved, how long do we have to arrive in the country to start using it? I seem to get this query a lot. If, example, I get a 1-year visa, does the clock start on the day the visa is approved, the date I select, or when I actually arrive? Is there a time frame I have to activate, or does it start immediately on approval?
Well, in theory, you have 3 months to activate your visa, but the activation is an online process. So that's the threshold. It's 3 months, but then sometimes we have longer visas, but not 1-year visas, like for 3 or 4 or 6 months. And in this case, you have a little bit more flexibility. But I'd say that the usual case is to do it within the first 3 months of the visa start date.
Nancy says, how does one keep US investments without a borrowed US address once you become a French resident? Mr. Shelton?
Yeah, Nancy, that's really where we come in. We're able to work with a few different US custodians who are really able to keep those investments within the US, even while we're using your French address. And so that's really part of the services that we provide, and really keeping those investments where they should be, managed actively, and so that you can be in France without worry.
There you go. Nancy, get the camera out and take a picture of that on the right-hand side. Okay, we've got a lot of sort of personal visa questions. And look, as I said, there's the contact details on the screen, guys. If you want to send over an email to any of the specialists here today, we'd happily have those conversations to see if and where we can help. The messages are coming in thick and fast. I'm conscious of time to sort of get this wrapped up. And I think everyone who's asked questions there, without sort of going for everyone in every single detail, they, somewhat personable here and there. We encourage you to get in touch. Take us up on these free consultations. As I said, there's no cost or obligation with any of us. We'll see if and where we can help. Just an interesting one there. Someone has enough retirement funds, won't be able to work with US clients. The visa would be more able to work versus the work necessary being primary source funds on the entrepreneurial visa. Again, quite specific. Let's speak to the individuals regarding this. Guys, I want to take a time again to say thank you so much for your time here on a Monday evening. Appreciate it's getting late, and we'll probably head on back home at 7 o'clock at night. Guys, thank you for joining in, whether you've attended the session today or watching the recording. Again, look at the question, look at the boxes here, the emails. I'm going to send a follow-up email once we have a copy of the recording, links to everyone's diaries and contact information. And I encourage you to reach out to see if and where we can help. Anyone thinking of moving to France as well, anyone you know, please feel free to pass on our details. We'll happily begin those initial conversations with anyone and everyone.